Good morning, guys, and welcome to our first class on audit and advanced audit and assurance. My name is Ansa Thomas, and I'll be the one to be taking you through. We'll be having maximum 8 meetings for the whole audit, advanced audit and assurance course. And there will be times for us to pick up some past questions and also look at them just to prepare you for your exam. Now, let's go straight and look at your syllabus, what you are supposed to do, what you are supposed to know according to your syllabus. Now, per your syllabus, you are meant to go through the learning process of these areas. So you are supposed to go through part A. It's actually a 100-mark question exams. You will have 5 questions. 5 questions. And these are the weighting of the areas. Part A is talking about ethical, legal issues and accepting and managing audit engagements. Part B is talking about audit planning. We have audit and assurance methods to gather evidence, conclusion and report of an engagement. Then we will be having the public sector aspects for these two, where we see the statutory role of government, external audit, and public accountability in Ghana. Then we will look at public sector audit, then current issues. On these current issues, there is a recent paper that Registrar General about rotation of auditors. So I would need you to get that document. If I get it, I will share it on your platform. All right. So these are and those are that we'll be looking at. Now, from my end, how I'm going to actually take you through this syllabus content is to actually combine these two in a one class. Okay, we'll combine these two in a one class. Let's pick up a call. So like I was saying, I'll combine these two and I'll treat it under ethical and professional issues. So you have to get ready for 20 marks in these areas when I'm done. We will look at the ethical aspect and the professional aspect. The legal aspect will come to the professional side. That is how we will categorize it. Then we will come to, so when we start, you see what goes to the ethical and the professional issues. Then this C we'll be looking at is 25 marks. And what goes into that area is, number one, we'll be looking at planning and risk assessment. Then number two, we'll be looking at evidence. Okay, how you gather evidence. Then number three, we will be looking at evaluation. Some call it finalization. Then 4, we will be looking at a group financial statement audit. So group financial statement audit, that one will go into your 25 mark. Now, you will realize that because it is a group financial statement audit, we will need you to come along with this class with your knowledge you have in FR and CR, consolidated financial statement. So all the standards that you learned in FR and CR will come to play, all right? That is that. Then we will look the final, this part, the part D, which talks about audit reports. We will be looking at this time, you are almost at the end of your audit and you are designing a report. We will be looking at, once you are done with the audit, we will be looking at subsequent events. If you remember your IAS 10, you know that some events happen in between the end of the financial reporting date and the date financial statements are authorized for issue. Because you are auditing a financial statement that is up to a reporting date, you see that the event that happened after the reporting date can have effect on those things that were there even before the reporting date. So how you go about it, once you are done with that, you have to be looking at the meeting you will have and consider some audit adjustments that you have to be passing. Audit is as practical as it is, so you have to be passing some adjustments. Then at that time, you've concluded on all adjustments and done your meeting, you now consider writing your audit report. Okay, you consider drafting your audit report after you've done judgments on the evidence, okay, of the evidence, both qualitative and quantitative judgment on the evidence that you gathered, because it is this evidence that is going to lead you to express your opinion in the audit report. All right, so that is it. Then after that, you look at public sector. We combine them for 20 marks, this and this. You combine them for 20 marks in a 2-lecture. Then we have the current issue. So anything that is happening currently will be brought to say. And now the recent one that has come out is about the rotation of the auditor. We will look at this thing in corporate governance as we talk about the ethical and the professional issues. So that is how your syllabus is weighted. And that is how we are going to approach the study or the lecture that I will be having with you. Okay. Now, that said, let me do some introduction on the course that you are doing so that you will appreciate what you are going to face. Let me just do some introduction for you. Now, your course is Advanced Audit and Assurance, which means that you have done audit and assurance. So the assumption here is that you have passed your audit and assurance, okay, exams. All right, so you will need all the knowledge that you had in your audit and assurance paper. Okay, so you need everything. I know some of you might have had exemptions, and perhaps that one, don't worry at all. Maybe you are shaky. Okay, so what if I did not go through the audit and assurance concept? So we will be considering all those things here in this lecture. Okay, now that said, let me just move straight to the introductory session that I want to have with you. So we are looking at advanced audit and assurance. So the two concepts here are what I want to bring to play. So we have audit. Wow, what is happening to this pen? We have, wow. Let me get this thing sorted, okay? Okay, so let me open a new one and see if this thing happening will go off for us. Wow. Okay, so guys, okay, so the name of your course is stemming out from these two concepts. We have audit and we have assurance. We have assurance. Now we need to understand the two. For those of us who have actually not done or had exemption to the audit and assurance aspect, this is to help you get the foundation. So we have audit. Now, the original translation, the initial word out of which we are getting this audit is from the word ordeal. And this one simply means to hear. All right, it means to hear. Now, the concept is stemming out from the fact that in the olden days, somebody had to be given a task, especially those who were tasked with collecting monies, all right? And these monies are now to be brought to the kings. Now, what happened is that in those days, it means that whoever is collecting that money, somebody must ensure that the money that the person went to collect is the same money that is being given into the coffers of the king. So that is where it is coming from. So what I heard is what I report. All right. So that is where the concept is coming from. So if you have watched movies like Into the Badlands, where there was concept of baron and baroness, you see that there are clippers who ensure that what the people, so you take a land from the baron, work on it, and when it grows, you harvest the land, you have to give some to the king. The clippers will make sure that you do due diligence and report to the baron as agreed. Other than that, your life will be taken out from you. All right. And even in Ghana, when we were in school, we had concepts of ebunu, ebusan, all those things. So somebody will give you a land. When you harvest on it, you will, group the harvest into 3 or 2. If it is 3, then it means ebusan. If it is 2, then it means is it ebunu or something? Yeah. Then you give a portion of it to the person who gave you the land because he gave it to you for free for the purpose of harvesting and giving him part of the harvest. So that is how audit has been in general. So you could see clearly here that as at that time, the objective here was to check. This was checking. That is the main objective. Checking what? That you report correctly, that fraud is not happening, all right? You don't commit fraud, all right? So that is what the concept has been, okay? And that is what in modern days, these things have now been translated into. Now, in modern days, you realize that the concept has changed from checking for fraud to what we call expression of opinion, all right? Expression of opinion. So the auditor is supposed to comment, all right, give his view about the financial statement that has been prepared. Okay, so that is how the evolution is happening in the audit environment, all right? So that is how it is happening. Now, contemporary world, you see that there are people who have money who establishes business, but they really don't have the know-how of managing those business. Okay, so when they employ people, to manage their business. Those people that they've employed has to report back to them. And there, so we have the owners here, the owners. So we say the concept of ownership. And on one hand, there are the people who manage the company, okay? So we call them control. They manage it, they control the affairs of the company. Now, these people provide capital, economic resource, and these people who are in control are supposed to use the economic resource so that, like the assumption under the financial management course, so that they will maximize the wealth, okay? They will maximize the wealth of those who invested their money into the company, which is the owners. We call them shareholders, okay? Then on this side, we call them the directors. So you normally hear board of directors, okay? So that is how the concept has come to. All right, now, how do we know that these people are fulfilling the objectives of the ownership? And this gap that is here is where the auditor falls. So just like the clippers, these people, the auditors, are supposed to ensure that whatever information that is coming here, from here to the ownership, in terms of the financial statement, are actually true. They are actually true and they are fair. All right. When we say something is true, what we are trying to mean is that the thing is honest. All right. It is as it is. Okay. And we say something is fair, we are saying that it is free from bias. Okay. It has to have both, the two, because something can be honest, but it can be biased. All right. Yeah, that is it. So we have to come up with both so that the thing will be true and fair to those people who have invested their money into the company. All right, so that is how the concept of audit has evolved. Now you see that per this illustration that I've given you, there are concepts like, one, separation of ownership. And control. Like I've explained, these people own the thing, but they don't have the control. These people control, but they don't own it. And so there is a side that produces all the economic resources for another side to control. All right. And this concept breeds what we call another concept called the agency relationship. Agency relationship. Now, what is the agency relationship or the agency theory? Okay, what is this agency theory or agency relationship? It is a relationship that is existing between the owner and the one who controls, such that the one who controls is an agent and the one who owns is the principal, and that is the relationship between them. So the agent is meant to do the bidding of the principal, okay, and that is what the agency relationship is about. Now, in this agency relationship, therefore, we see concepts like stewardship and accountability. Stewardship and accountability. And that is what the agent is supposed to exhibit before the owner. So the agent is supposed to be a steward, a charge keeper, all right? So the charge keeper of the finances, the economic resource, all right, and how they will use it. And after they've kept charge and used it, they now need to account for it. Okay, so the agent has to account for it to the owner. That is it. And it also breeds the concept we call fiduciary relationship. Okay, fiduciary relationship. What is a fiduciary relationship? A fiduciary relationship is a relationship whereby one person or one party owes a duty of care. The key is a duty of care to the other. So you see that the agent has a duty of care of the economic resources that have been put in his hands. He's supposed to keep charge and he reports account to the ownership. So that is it. Now, the problem here is that if they are doing it, fine. But if they are not doing it, that is what breeds a concept that we call agency problem. Agency problem. Now, the agency problem is when these things are breached, okay? So instead of having a duty of care and doing the bidding of the owners, the people who are in control will now tend to see their own interest, okay? And that is what is called the agency problem. So the agency problem is coming from a concept of self-interest. Self-interest. You see that the board of directors who are supposed to be in control and also account as agents to the principal are seeing their own interest. I always say that always look at the CEOs. They are the ones that are driving the big cars. Not even the owners. They are the ones that are, the CEOs are the ones that are always using the big cars. All right, so that is the agency problem. The agency problem will now breed what we call the agency cost. The agency cost. The problem expressed in its economic term is what we call the agency cost. And all these things are happening because these people who are in the agent side have information about the financial statement that the owners don't have because they are the ones to communicate to them. So that brings us to a concept where we call information asymmetry. All right, where one information is only at one side, all right, and if it's not communicated to the other side will never have knowledge of it. Okay, so that is that. It is called information asymmetry. All right, so that is that. So these are what the concept that comes under the when we talk about separation of ownership and control. So you realize that if these are what are happening, then it means that the auditor now stands as an intermediary to the ownership, making sure that whatever information that is coming here is true and fair. All right, that is what they are doing. Okay, to be able to do that, therefore, it gives rise to a concept. So the auditor, who is the intermediary, there is a concept that breeds here, and that is called professional skepticism. Now, professional skepticism. The auditor is supposed to approach the information, which is the financial statement that is going to the ownership, with what we call a questioning mind. With a questioning mind, all right? And also being alert to any misstatements that will be coming. So once we go along, you understand what I mean by misstatements and all these concepts that we are talking about. But this is the basic foundation of audit that we want to learn. Now, what therefore is audit? What therefore is audit? When we say audit, what is audit all about? So you see that audit therefore is an independent examination. Independent examination. Examination of the financial statements, okay, prepared by the entity, prepared by an entity to enable the auditor, to express his opinion, her opinion as to the truth and fairness. So let me use the word true, as to the true and fairness of the financial statement. Okay, so that is what audit is all about. That is what audit is all about. Now let's look at the other angle of the course you are doing, which is called assurance. Now, you will see that the examination that the independent auditor will do, at the end of the day, you will express an opinion. Now, the assurance, therefore, is an engagement. It's an engagement. When we say an engagement, the relationship that will be between the entity and the auditor. So it's an engagement whereby the practitioner, which is the auditor, the practitioner, expresses conclusion. So that conclusion that is seen in the audit expresses a conclusion. Now, the conclusion that he's expressed is designed. The purpose is that that conclusion is designed to enhance assurance. Is designed to enhance assurance. And what is assurance? Here we are talking about confidence, all right? Confidence. Okay, so let me give you a typical example. A lady wakes up in the morning, dresses up, sits before the mirror, do her makeup, all right? Seeing herself in the mirror, he has some level of some assurance that, oh, I'm looking beautiful. But let her step outside and let a nice gentleman meet her by the road and say, oh, my lady, you are looking awesome. That one gives her more assurance than the one that she did even in her own room with the mirror. Okay, so that is what happens. So we say that the engagement practitioner expresses a conclusion. In this case, the conclusion is the telling the lady that she's looking beautiful. And that one is to enhance assurance, boost her confidence. All right, so that is it. So you see that audit is the process, but assurance is the product. So that is the relationship between the two. All right. Audit is the process, then assurance is the product. Okay. So we are going to now focus on assurance. We are now going to focus on assurance. Now that we've understood the concept of everything we are doing here, let's look at assurance a bit. Let's look at assurance. Now, looking at assurance, we are going to look at the elements of assurance. The elements of assurance engagement. Then, on the other hand, we are going to look at the types of assurance. Types of assurance engagement. All right, so let's look at the elements of assurance. There are 5 elements. Number 1, we are talking about what we are going to audit, okay? So we are talking about why we are doing what we do. So we talk about the subject matter. And this, we are talking about the opinion, the true and fairness. Of the financial statement. Okay, that is what we are looking at of the financial statement. Number 2, we are going to look, the other element is the third party, the 3 parties involved. Sorry, the 3 parties involved. Who are the 3 parties involved in an assurance engagement? We look at the practitioner. In this case, we are talking about the auditor or the assurance provider. Okay, then we are going to look at those who prepare the account itself, all right? So let me use the word preparer. Okay, those who prepare the account themselves, those are what we are going to, the next party, or probably the entity, okay, the reporting entity, And those ones, we are talking about those charged with governance, all right? So we are talking about the board of directors or the management, all right? Then the third part, we are looking at the intended users who are going to use what we've audited, the intended users. Okay, so here we are talking about the stakeholders or the shareholders. All right, we are talking about these people. Number three, we'll look at standards. What is the measurement criteria of what we are doing? What are we using to say, to bring about this subject matter, express our opinion on the financial statement? We are going to look at the international accounting standards, the IASs, all right? We are going to look at the IFRSs. We are going to look at the GAAP. And this practice that we are doing, we ourselves are going to use the international standard of audit. So these are the basis, the base of measurement of our true and fair opinion. Okay, so we need to measure it against something, and that is the standards. Okay, the financial statement prepared according to the standards. All right, so those are the things we are talking about. We have the company's code. The company's code gives some guidance to how accounts are to be prepared and all those stuff. Then four, we are going to look at evidence as to whether the financial statements are prepared according to the standards. We will only have to see it by the evidence. So we are talking about sufficient, appropriate evidence. All right, so that is that. Then lastly, all this true and fairness, after considering all those things, are going to be expressed in a report. So we say the audit report, all right? Audit report. That is the means of communication of the auditor, all right? So that is that. Those are the elements of, these are purely audit and assurance things that you are supposed to know. Now, talking about the types of assurance, you know, we have reasonable assurance, and we have limited assurance. Okay, now if I ask you to check behind my door, because I saw a shadow of somebody holding a gun, and I ask you to check, okay, there are two statements you can come back to me with. You can come back and tell me that after you've checked everything, you can come back and tell me that, oh, there is nobody there that is holding a gun for your check. But if you go there and you don't really do a thorough check, well, you can come back to me and tell me, oh, there is nothing that indicates that there is somebody there who has a gun. All right, that one, it means that you just went outside and peeped, and you just came back and you told me something. All right. Now, but so with a reasonable assurance, you say that there is no absolute assurance because you cannot test everything in the company. No, you cannot do 100% audit. It is actually impractically possible. All right. Now, within the time scope that you have, it is very, very impossible. So we are looking at reasonable assurance, getting enough to tell us. So you see that here, you see that the independent auditor is supposed to use a thorough procedure. Okay, a thorough procedure to get evidence, all right, to get his evidence. Okay, now when he uses that thorough procedure to get his evidence, his communication is now positive and direct. There is nobody there. The financial statements are true and fair. Okay, it's so direct. Okay, it's so direct. So both you demand sufficient appropriate evidence, but the procedure, you see that this one is very thorough. This one is less thorough. It's less thorough. And the report is quite negative. It's negative. It's negative. So you see, there is nothing that shows that there is nothing has come to my attention to say that there is somebody there holding a gun, right? It's indirect. It's not straightforward. You see that this is indirect and it is in antithesis to this positive one. We say this one is a negative statement. Now, a typical example of this is this one. It's an external audit. An external audit. And here we are just looking at some reviews. All right, we are looking at reviews. Okay, so that is the difference between the two. Okay, so these are the basics for what we are learning. And I think you should have this before we can actually come back to what we are supposed to look at in our advanced audit and assurance work. Now, what you realize is that in terms of studying your advanced, so here we are saying advanced audits and assurance. All right. What we are going to do here is go back to the syllabus like I explained and take it up from there. All right, but these are the basics. So number one, you need to have your audit and assurance knowledge. Audit and assurance knowledge. And here you see that the ethics come to play. The ethics is the same, all right? Ethic is the same, risk the same. The procedures of substantive testing is the same, but here you will do more, okay? Finalization is the same. Audit risk, audit reports, the same. You need those fundamentals, okay? You need those fundamentals. Now here we are going to add, you need the FR here, but here we are going to add the CR knowledge because we are going to do group audits, all right? And plus we are going to be talking about, so we talk about audit of consolidated financial statements. We will talk about issues of practice management. It's a new thing you might see here. Current issues, all those things, okay? We'll talk about it. And we'll look at some non-assurance engagement. So these are the things you might be seeing in this course. Now you realize that in terms of answering question here, you need to actually state it and explain each point, okay? That is the technique. You need to explain each point, and it is very, very, very important that you do that, okay? All right, so let's go straight. Let's go straight to our main thing about the advanced audit and assurance. We are going to look at the regulatory environment. That is what your syllabus wants us to consider. Now, audit is regulated the whole world and even in our nation, Ghana, okay? So we have the International Federation of Accountants, all right? International Federation of Accountants, for which ICA is part. This thing that you are doing is at ICA. These people regulate the accounting profession. They regulate the accountancy profession. So ICA is a member of IFAC. All right. And under these people is an organization that they've decided to make so separate. Okay, so they each operate on their own. We have the International Audit and Assurance Standard Board. See, these are the people that will set the standards for audit. Okay, they set the standards for audit. Now, you know, we have audit standards. So they have the ISAs, right? The National Standards for Auditing. All right, they establish those ones. And we have the IAESB, International Audit Education Standard Board. All right, so these people will give us the outline what we are supposed to learn. So they are in charge of education, anything education, what we are supposed to learn in terms of the audit. Okay, then we also have the International Ethic Standard Board of Accountants, the IESBA. All right. So these are the people that brings out the ethical considerations. Okay, the ethical considerations. You look at them. They are very, very important. Now, when you is still on the international platform, we have the Public Interest Oversight Board. You see, we are accountants. Accountants are being the auditors. And if you let these bodies are, you can see they are all accountancy bodies. So it looks as if the oversight is even having a biased position. So now we now have people who are not really accountants. So these are the people who form the Public Interest Oversight Board, who oversees. This particularly is in UK. In UK, in Ghana, probably you can see our parliament. Probably not all of them are accountants, but they oversight. All right. So that is that. Now, locally, when you come to Ghana, we have the ICAG, our mother institution, the people you are writing these exams to be part with. Okay. So when you come here locally, they regulate the accountancy profession. All right. Then we have the internal audit agency, that is the registrar of companies. Okay, it's also there. They all oversee how the audit profession is done. Even the registrar of companies, through his company's code, defines who an auditor is and all those things. All right. So that is the regulatory environment that you see and you are supposed to know. Now, let me just run this through. So one of the standards, which is ISA 250, talks about laws and regulations. Laws and regulations. And as part of our course, we are supposed to know the auditor's interest in these laws and regulations. So what you realize is that as for compliance to these laws and regulations, all right, it is the job of the people charged with governance. It's the job of people charged with governance. This is not actually the job of the auditor to make sure that the company is compliant. No. It is actually those who are charged with governance, the agents. Those are the people who are. But as far as the auditor is concerned, you realize that, for example, if a company is not compliant, you realize that, for example, if they are flouting GRA laws, you realize that if GRA is to come to the audit, this one can hit the financial statement in terms of penalties. So if they are caught, they will be paying penalty. All right. So this penalty will be expressed in the financial statement. If they are not caught, it means that they should be providing for it. all right? Because we've had instances in Ghana where companies have reported profits and their retained earnings are looking good. And financial statement, we say they are true. So for you to know that GRA is conducting audit, and you know, particularly in Ghana, they don't do the audit for the same year. They wait, then they come and do 3-year audit. By the time you realize, you see that non-compliance has huge monies that is to be reflected, that money will scratch away some of the retained earnings that the company has accumulated, all right? So you see that then technically the financial statement weren't as it seemed. The profit that was showing forth was not as it seemed, okay? And if you are, so it means that if you are not caught, you should make some provisions for these kind of things, all right? So your tax provision should actually be high. The accountant's provision of tax should actually be high because of probably 1 or 2 non-compliance, all right? Okay, so that is that. So you see that if they are non-compliant, it's going to affect the company in terms of their going concern, okay? So you see that even in this one, before we delve into the main audit work, you see that provisions, which is IAS 37, come to play. Then when we talk about going concern, we see that IAS 1 come to play. So you need your knowledge about the IAS standards, okay? So to express your opinion, all right? Now, if the auditor realizes, so what is the auditor's responsibility in terms of this non-compliance? All right, it depends on the law that they are flaunting, all right? So number one, the auditor is supposed to have knowledge about the laws and regulations. So you need to have knowledge about the laws and regulations concerning the industry or the entity, all right? You need to know. You need to know which are the laws. You need to know. Now, if they are not compliant, then it means you need to report it. Who are you reporting it to? At this point, you are reporting it to those charged with governance, all right? Those charged with governance. Okay, now ISA 260 says something interesting. If there is anything, report to the audit committee. All right, report to the audit committee. You report them to the audit committee. Now, if it is serious issue where it needs an oversight authority, regulatory authority to look at, there are such cases like money laundering, then it means that you need to report to the authorities, okay? You need to go beyond the company and report it to the authorities. All right, so that is that. That is that. It's something you need to actually check. So these are just the regulatory environment that embodies our audit profession. Okay, these are the regulatory environment. All right. So that said, the next thing we should probably look at. So you see that whatever we are doing now, it concerns the 20-mark question. Okay, the next thing we should probably talk about, therefore, since I mentioned the audit committee, therefore, something of corporate governance. Corporate governance. Now, this thing is dealt extensively in the audit and assurance paper. Okay, the audit and assurance paper is dealt. We are just talking about the word corporate is coming from corporation. Governance, we are talking about, originally it's a word for steering, okay? So when we talk about corporate governance, we are talking about how an entity or a corporation or a company is directed and managed, all right? And managed, or can say controlled, right? All right, so that is basically for ethics and corporate governance. That is what we talk about. Now, there has been a new release. Now, this thing came about as auditors, students of auditors. You need to read these cases about Enron and Arthur Anderson. That is your assignment. Go and read more about it. You cannot say you've done audit and you've not heard of this case. And because Enron is a company, it's an oil company, petroleum sector, and Arthur Anderson is the auditor. And something happened, which I don't want to tell you now, which I want you to go and read about it. Because when you read about it, it's stuck, all right? So, I mean, issues of ethics crop up, and regulators have to close down Enron and Anderson. And it brought in US, it brought a serious case. And in 2002, there was the Sarbanes-Oxley Act, 2002. They made it a law, but in the UK there is it's a principle. Okay, it's a principle, and that principle is so. But so it means that if you flaunt it, you are penalized for it. Okay, it's a principle, and the principle we are talking about the corporate governance code. Corporate governance code. All right, of corporate governance principle. So the UK practice it in the principle. In the US, it is a law. All right. Okay, so that is that. That is that. Now, there's an updated one as of July 2018, and the corporate governance code, the July 1, 2018, have 5 arms. We have leadership and purpose. All right, board leadership and purpose. We have on another angle, we have division of responsibilities. We also have on another side of it, we have the audit, risk, and internal control. All right, then on another side, we are talking about composition, succession, and evaluation. Then the last bit of it is the remuneration. Now, these are the angles of the new covenant. Now, the board is saying that you have to go through a rigorous activity of bringing people on the board, all right? Of bringing people on the board. You don't just bring people to board leadership and purpose. You don't just bring people on the board. Those people should have knowledge about the entity, okay? They should really have knowledge about the entity because they are coming to determine the direction of the company. In terms of leadership, these people determine the mission, the vision, all right, the core values of the company. And so these are the real pace setters, okay? They do formulations of policies, formulations, they do monitoring, all right? So anybody who is coming on the board should have knowledge about the entity, okay? And since the entity prepares financial statement, there should be somebody there who is an accountant, sort of, to have knowledge about financial statements, all right? So that is about the board leadership and purpose, okay? So they are in charge of corporate strategy, all right? So they determine the direction and everything concerning the company. Then we have the division of responsibility. So if you have these people on the board, then it means that you have to determine there should be a separation of responsibilities, okay, division of labor. All right. So that is that. Those people who are here as board leadership, they are supposed to have time. They are supposed to really have time for meetings. Okay. Now, at least every quarter there should be a meeting. Okay, so a minimum of 4 meetings should be happening at least. All right. So I mean, they should have knowledge, have time for the entity. All right. That is it. Then the division of labor separates what each and every individual is supposed to do. But most importantly, we have the board chairman. Okay, we have the board chairman who is there, and we have as part of the board chairman. So we have the chairman, then or chairperson. Then we have the other members who should be split into executive directors, which we call the heads. Executive directors, which we call the heads. And there should also be nets, non-executive directors, which we call nets. All right. So that is it. And this I'm talking about is to talk about the composition. All right. The composition of the board. So we have the chairman. So the board itself. So let's say the chairperson. So that won't be gender bias. So we have the heads and the nets. So let me do plus the nets. All right. Plus the nets. That's the net. Now, you see that there's a chairman, and the chairman is for the board, and there is somebody who actually, so the heads are those who are in charge in the day-to-day administration of the entity, okay? And these people, the nets are the people who play the oversight role over the heads, all right? So in the heads, we have the CEO, all right? So the executive directors, we have the managing director, or these days we call the CEO. We may have what they call the COO and all those stuff. But those people, according to the division of responsibilities, are supposed to be separated from the chairperson position, okay? So no one person can be a CEO who is an head and also the chairperson of the board. It doesn't happen that way, okay? So the chairperson, therefore, should be a NED. It should be a non-executive director, a NED. All right. So that is what the structure talks about. Okay. Now, this board should be reviewed almost every year. It has to be reviewed. Okay. If new people have to come into play, the board has to be evaluated and succession plans has to be drawn. Okay, so it has to be reviewed. So let's say it has to be reviewed annually. Okay, annually, because if you sit at one place for a very long time, there is threat to even your independence. Okay, because of familiarity. Okay, so that is that. Then the composition. We have composition for the audit. So here we are talking about the audit side. We are talking about the audit committee, which we will look at again. We are talking about the risk committee. Okay, we even have nomination committees. Okay, nomination committees. Those who will be doing the succession, determining the side. We have the nomination committees. Nomination committee. All right, that is that. We have the remuneration committee. So all these committees, their composition. So for instance, the audit committee should be made up of nets, with the chairman or the chairperson of this committee, not a member. It's actually not a member. If you have a minimum of 2, so we have 2 nets, right? The board composition has to be balanced. All right, the board composition itself has to be balanced. So if you may have two heads and two nets, with the chairman being a net. Okay, so you see that the nets take majority. All right, so that is that. The nets always take majority. So audit committee should be made up of net, risk committee made up of nets, remuneration committees made up of nets. All right, and these audit and risk committee come up with the internal control process. Okay, the internal control process of the organization. All right, so that is that you need to know. But we will single out the audit committee because we are doing audit. All right, we will single out the audit committee because we are actually doing audit. Okay, so let's separate the audit committee here. So let's look at audit committee. Now, like I said earlier, if there is anything interesting, ISA 260 says that report to the audit committee. All right, report to the audit committee. So the audit committee therein, we've spoken about the composition, who comprise the audit committee. We are talking about the nets. All right, with the chairman or chairperson who is not actually a member, not a member of the committee. All right, so that is that. They have an objective. The audit committee should have an objective. Committee should have an objective to internal control, and their work around formulation, monitoring, and evaluation. All right. Okay, so they lead. In fact, you see that it's two financials. So anything financial, so internal audit and all those things are in the interest of the audit committee. So their roles, therefore, engulf from this. They formulate, they monitor, they evaluate. All right. So that is what they do. Not only that, they also have relationship in respect to the external audit. They make recommendations for the external auditor, their fees determinations. Okay, so they make recommendations to the shareholders. They don't appoint the shareholders, but they make recommendations to the shareholders. And via their work of establishing internal audit. So the internal auditor reports actually to the audit committee. All right, reports to the audit committee. Okay, so in conjunction with what they do in respect of the internal audit, they assist the external auditor in terms of his work. Okay, but the advantages are that they boost confidence. Okay, they help check fraud and all those things. Those are pure knowledge base, and it is not of much interest in your paper right now. But what is most interesting, or what is most important, is that anything has to be reported to the audit committee. All right. A disadvantage is that they are a committee, they will sit, so it costs money. All right, it costs money. And finding people on audit committee, you see the audit committee, as part of this composition, you will need to have people with accounting background. Better still, you should have a chartered accountant in there. All right, you should have a chartered accountant who understand the reporting, financial statement reporting, and because they've done reporting, they are able to spot certain things. All right, so that is that. So the law and regulation and the audit committee are something that you are supposed to know as part of additional knowledge. All right, nothing interesting there. But when it comes to this part, the most interesting aspect that your course demands that you know much of is almighty money laundering. All right, almighty money laundering. Almighty Money laundering. So let's quickly look at it. Money laundering. If you check your current issues, it is part. All right. So it's something we need to take a look at. Money laundering. Money laundering. Okay, so what is money laundering? It is money that you wash. Money laundering, as simple as it is. Okay, it's money that has been washed to make it clean for use. All right. Now, the technical definition that we have is a process. Okay, it's a process by which criminals conceal. When we say conceal, we mean to hide the true source of their illegal monies. All right. Their illegal money. So let's say I am your tutor, you know the work I do. I'm an accountant by profession, a chartered accountant and a chartered tax practitioner. So I work as an accountant in a firm called Richards Logistics. And I also teach. So you can actually assume my salary range and how much I am. But suppose all of a sudden I have an amount, say $10 million. $10 million. The question is how, and this $10 million, the truth is that I need to hide it. I need to move that $10 million in cash. In cash, I have it in cash. The problem is that I need to move this money so that if from my room, so that people who visit me is like those people who do land money. Okay, when the money is vomited in their rooms, I mean they need to move the money out so that people don't come in their room one day and see it's a problem. Okay, and another thing is that I need to also actually spend the money. I need to spend the money. So how am I going to spend this kind of money? If I buy a Ferrari right now, everybody will know that there is something wrong. Where did this guy have the money from and all those things? All right. So how am I going to spend the money? Well, perhaps maybe I can create a business with it. I can create a business. I mean, if I create a business and I make sales, I get people are able to monitor my sales. Well, what if I make the sales in cash? So I make the business and it is a cash sales only, all right? Cash sales only. You may never know. If I deal in car dealership business or something, and it's only by cash basis, you can actually have difficulty in tracking things. So it's cash, or I can set up an institution like my boss has done, and I provide only services like so like this prof training solutions. Okay, if you people have, I think that you are paying like 500 Ghana cedi or something for each class, but nobody will know the number of people that attended my class. So if let's say you people are 200 students, I can actually shoot it up and say, oh, I had like 500 students, and you see that if I multiply, instead of doing this thing to get 10,000, I'm already at 25,000. All right. So that is how it is. So, I mean, I have to create a service business. Nobody can actually determine the amount of money that comes with. Probably that is how I can spend the money without the notice of people. Okay. So, how money laundering, the processes they go through are what we are going to look at, okay? And I'm not actually teaching you how to launder money. I'm teaching you how to spot money laundering, okay? So you need to know so that you can able to, I am a Christian, and There's a scripture that I like best. It says that God comforts us so that we can also comfort people who were in the same situation that God comforted us. Okay, so it means that when you have experience, it makes it easier to deal with people who are going through the same knowledge, because people want to talk to people who have been through what they go through. And like I said, I am a Christian. The Bible says that we have a high priest who understands, because he went through what we went through. He himself did not do anything but went through um a lot. So that is that. Okay, so out of that, this is how money laundering, people launder money. We have 3 stages. So let's look at the money laundering stages. We have 3 stages. We have number 1, placement. Okay, placement. Like I said, we create a business. All right, we are talking about how you put the money, how you kind of use the money into the system, so you don't get it so noticed. You create a business, and like I said, it's actually cash in nature, cash business in nature. Okay, that is that. You can also fake your sales. Like I said, you fake sales. You fake sales. So I mean, 200 people came, but I told you 500 people came. You fake sales, and that is how, just to hide the true source of the money. Another thing is that you can actually, so you see people opening forex accounts in different countries. Of course, if I'm to convert this 10 million Ghana cedis, $10 million into Ghana cedis, is that huge? These days, the dollar is like 11 cedis. So it means that I'll have 110 million cedis. All right, and that is not small money. Okay, but if I deposit it somewhere in Swiss bank, with what I heard, the initial deposit alone, the base deposit is even $250,000. So when I put this thing in a foreign bank, I don't think it's of much issue, because even Ghana here, if I go and I said I'm opening an account with this bank, I think the bank will flag me to economic Commission of Organized Crimes, Yoko. Yeah, they will flag me to those people. But so you have to open the account outside Ghana. All right, so that is what you do. So if you have a question when they open an account like that, you should be able to spot that money laundering is going on. And another thing you can do is to actually go into betting. I'm recording this today, a day where Arsenal has scored my team, Liverpool. It doesn't happen often, but it happened today. Okay. So people actually betted. Okay, so you are into betting, and in betting you get more cash, you lose cash. Okay, so you can bet that maybe Arsenal will win Liverpool. Probably bet that Liverpool will win Arsenal at one betting company, different betting company, and also go to another betting company and say, all right. So you lose the money. You lose some money, but you get more, just to hide the true source of your money. Okay. In the same way, if you do a business, well, probably GRA will tax you some. Okay, but who cares? You have $10 million. I mean, giving the government small to make it legit, it's not that the problem. So you can actually do all these betting. Number 2 is what we call layering. I mean, doing a transaction one on top of the other, and another on top, on top, on top, on top. Okay, so what you see is that you are moving the cash around. You are moving the cash around through a series of transactions. Okay, via series of transactions. So when you see that small transactions are moving from one place to the other, and all those, one transaction could have been done, but it moves here, goes there, Then it builds on top. Okay, that is what we call layering. And the third part is integration. Okay, integration. At this point, the money has been washed clean. Okay, all right. So cash now looks okay. Cash looks clean, and let me say legit. So you can actually spend it. You can spend it here without fear. All right, you can now spend the money. All right, so that is the stage money laundering goes through. Okay, now not only are you supposed to know this. Okay, so apart from these things, when you see instances of let's say majority of the transaction of the company being cash, you should be able to spot it. Okay, you should be able to spot it. It's very, very, very important. Okay. When there are bribes, I mean, who will show off where they had their bribes? You need to spot it. When there is tax evasion is also an example of money laundering. Okay. Now, what is the auditor's responsibility? Why are we interested? As an auditor, why are you interested? I mean, it is the people, they are committing money laundering, of course, but in terms of audit, why are we so much interested on it? Because money laundering is a crime and it has to be dealt with. So let's talk about the auditor's responsibility. So auditor's responsibility towards money laundering. Okay, number one is that before you even start you need to do a proper KYC, knowing your clients. So you need to know your client. If they are at this stage, they are having money or you spot it, you don't even start the work. You need to know your client, not only just knowing them, but you need to know the source, how they get their money. Okay, the source of their money, how they get their money. You need to know. All right. Yeah, you need to know. And as part of practice management, you need to appoint in your firm a money laundering reporting officer. All right. You need to, so that any money laundering issue they spot on audit, they will report it to this money laundering reporting officer. That one will mean that you need to now train your staff on money laundering so that they can be able to spot it. They can spot it and also report it to the money laundering reporting officer. All right. Yeah. So out of their training, they are required not to take off the client. So you've spotted money laundering suspicions. You need not to do anything of it. You need to do your job as normal, as you also report to the money laundering reporting officer. Okay. Now, at this point, another thing you can do is that when is spotted to the money laundering reporting officer and he does his evaluation, you have to report it to the authorities. Not to the people charged with governance, but to the authorities. Okay, because it is a crime. If you don't report, you are aiding it. All right. And aiding and abetment is a serious crime. All right. Not only that, you can also resign from the job and resign from the audit, but doesn't take away the fact that you still need to report. Okay, and we resign from the engagement. Because the integrity of the client is something that is needed as part of ethical regulations. All right, so I mean that is it. Okay, that is it. And as part of your 20-mark question, I mean, I'm concluding. As part of your 20-mark question, like I said, you need to go through ethical and the professional consideration. All right, these are for 20 marks. So on the ethics side, we are going to look at the threats to objectivity, which will be in our next lecture. Threat to objectivity. And we'll be looking at the SAFI. SAFI. All right, and the SAFI is an acronym that is developed for things like self-interest. We'll look at that in our next lecture. Self-review threats. We look at advocacy threats, familiarity. We will look at intimidation. Okay, so we talk about it. Now, number 2, we will talk about confidentiality. Confidentiality. At what point do you have to go to the authorities? Because any information that you get from the job is actually supposed to be kept confidential. All right, so but at what point you go outside the entity and report to the law, we look at it. And we also talk about conflict of interest. So this is just to give you a heads up of what is to come in our next lecture. We then also talk about the integrity of the client. So these are things we will look at in terms of ethical consideration. Next week, we will look at that. When it comes to professional issues, we talk about money laundering, which we've dealt with it today. So next week, we will probably look at a case study, how your exams is structured. We will bring out the case and we will fish out the things about money laundering. So money laundering, it means that you need to look at the case, all right? Okay, so you look in terms of answering the question, you look for the clues in the question. You look for clues in the question, and the clues you will see cash transactions taking major part. All right, so majority of sales or transaction being in cash. When you see that, when it's about 50%, you need to spot it. All right, you need to be able to spot it. But you see a small transaction, more complicated transaction, is a hint. All right, complex transaction is a hint that you need to, see that there will be probably something that you need to check in the lens of money laundering. You can also see complicated groups. You can make serious plenty group structure when a simple company can be established for a transaction. You see, and already I've talked about tax evasion. I've talked about bribes. Yeah, another thing you should probably talk about is the politically exposed person, what we call the PEPs. All right, politically exposed person. I mean, if somebody become a politician and all of a sudden you see the life has changed, I mean, probably money laundering might be going on. Yeah, so that is that. And we also look at liability of the auditor. We talk about civil and, excuse me, let me make a call here. So you look at the liability of the auditor, and we'll be looking at civil and criminal liabilities. All right, and how the auditor deals with those liabilities. And lastly, we'll be talking about practice management. All right, because these bits are what form your 20-mark question. All right, so that it will prepare you. We will be solving case study questions. And in practice management, we're looking at obtaining a new job. All right, when you were what are some of the processes you go through for getting a new client? So we will look at advertisement, we will look at tendering, we will look at pre-appointment issues. Okay, pre-appointment issues, and we'll talk about fees, all right? Then another angle of practice management we will look at is quality control, all right? Okay, so we will look at all these things to prepare you. So in our next lecture, we will take a case about money laundering, then we will deal with it before we start the ethical threats and finish up with the remaining issues here in professional issues. All right, so that is it. If you have any question, you can reach me on my line 0261 79 10 79. You can also send me an email on answerthomas@gmail.com. All right, you can also reach us on Prof Training Solutions. All right, okay, so that is that. These are the means of contact, okay, because I'll be giving you assignments, you have to be sending it to me. All right, so that is that. I know this is enough to prepare you for what is coming, and you'll be ready for the first 20 mark question by the end of our next lecture. So thank you so much. If there is any issue, reach me out on this platform. All right, so see you guys next week.